Welcome to our channel, Trade with China. If you're doing business with or in China, what you're about to hear could really shape your strategy for the entire year ahead. We are going to decode the absolutely critical signals coming directly from Beijing's top financial regulators at the Financial Street Forum. So let's dive right in.
Our whole goal here is simple: to help you know China so you can do better business. It's about saving you time and money with expert insights. And today, that means we're unpacking the key messages from this really important forum so you can position your strategy for everything that's coming down the pike.
So here's our game plan. First, we'll look at the big picture, Beijing's financial blueprint. Then we're going to zero in on 3 key policy signals. After that, we'll translate all of that into a practical playbook for you, and we'll wrap up with the big picture and how you can stay ahead of the curve. Okay, so first things first. What exactly is the Financial Street Forum? Well, you can kind of think of it as China's annual State of the Union for the financial world. It's a huge deal. This is where the country's most powerful economic regulators get on stage and lay out their priorities, signaling the direction for the entire economy for the next year. And what was really key to notice this year was the lineup. We heard from the head of the central bank, the securities regulator, the banking regulator, and the foreign exchange authority. When you get all of them speaking together with one unified voice, it's not a coincidence. It signals a highly coordinated national strategy. It's a really powerful message of unity and clear direction.
So what was that unified message? Well, when you cut through all the speeches and all the announcements, it really boils down to 3 core policy signals. And these are the signals that are absolutely critical for any investor or business leader to get their head around.
And here they are. First, a clear commitment to fueling the economic engine with supportive monetary policy. Second, a plan to keep opening the doors wider by expanding market access. And third, a real focus on reinforcing the walls by strengthening risk controls. Let's break down exactly what each of these means.
First up, fueling the engine. The head of China's central bank made it crystal clear they're going to maintain what they call a supportive monetary policy. Now, in plain English, that means they're going to keep the cash flowing. They're making it easier and cheaper to borrow money, all with the goal of stimulating economic growth.
And this isn't just talk. They're rolling out some very specific tools to make this happen. We're talking about relaunching government bond trading, a new, faster refinancing system for companies, and big reforms for the ChiNext board, which is kind of like China's NASDAQ, specifically to help out innovative smaller companies. The bottom line here, they are actively making it easier and faster for businesses to get the funding they need.
Now, the second big signal is all about opening the doors wider. And this is really a two-way street. On one side, for foreign investors, they're streamlining the main channel for you to access Chinese markets. They're promising faster approvals and way more investment options. But at the same time, they're also making it easier for Chinese companies to list on overseas exchanges and raise money abroad.
And the data proves this isn't just a future plan. It is happening right now. The head of the State Administration of Foreign Exchange, also known as SAFE, pointed to these numbers. Since 2020, Forex trading is up 37%, and cross-border payments have just exploded, up 64%. This shows that China's integration with the global economy is not slowing down, it's accelerating.
And just to put that into perspective, look at this number. $11.6 trillion. That is the value of cross-border payments in just the first 9 months of this year. It's a new record, and it really highlights the massive, massive scale of these financial flows.
And to keep that momentum going, SAFE is rolling out some very practical policies. They're introducing measures to simplify trade, expand pilot programs for openness, and just generally ease foreign exchange. So for you as a business, this translates directly into less red tape, lower costs, and much faster transactions.
Okay, so that brings us to the third and final signal, reinforcing the walls. Because alongside all this support and all this opening up, Beijing is doubling down on managing risk. The message is pretty clear: growth is good, but stability is everything. The goal is to build a financial system that is resilient and can handle any shocks that come its way.
So where are they focusing their attention? Well, they're continuing the crackdown on virtual currency trading, they're encouraging smaller, weaker banks to merge and become stronger, and they're adapting financing rules to the new realities of the property market. It's all about being proactive and preventing problems before they can even start.
All right, so that's the policy deep dive. But let's get to the important part. What does any of this mean for your business? It's time to translate these high-level signals directly into your strategy. This is your playbook. Let's connect the dots here, because it's a pretty straight line. When they talk about a supportive monetary stance, for you, that means lower financing costs and a more stable environment to plan in. When they optimize the investment programs, that means quicker investment cycles. The ChiNext reforms? That's a huge signpost pointing directly to new investment targets in tech and green sectors. And those trade measures? Well, that's just less friction and faster payments. See? Every policy signal creates a direct opportunity.
So this all leads to the million-dollar question, right? With all these policies in place, where should you be looking to put your capital? Where are the real opportunities?
And the great news is, the regulators were not shy about this. They were quite explicit. The entire financial system is being geared up to support these specific areas: high-level technology, especially what they call hard tech, green and sustainable industries, advanced manufacturing, and innovative smaller companies. These are the sectors where policy support and money are going to be concentrated.
Okay, let's pull back for a moment and synthesize this whole message from the Financial Street Forum. What's the one big picture takeaway you should have? It's really this: Beijing is pursuing a very carefully balanced strategy. They're blending targeted support for key industries, a continued real commitment to opening up to the world, and a very strong emphasis on managing risk. The end goal here isn't just growth for growth's sake. It's stable, high-quality growth.
Understanding these signals today is the first crucial step, but staying ahead as they continue to evolve, well, that's the next step. And that's exactly where we can help you out.
This channel is all about bringing you practical knowledge to navigate business, investment, culture, and economic trends in China. Your comments, they really encourage us and let us know we're on the right track. So please press like and subscribe now for more actionable insights and win-win solutions. Don't miss out on the possibility to better understand and make money in your trades with China.
So I'll leave you with this final thought. China isn't just waiting around for the future to happen. It is actively, right now, building its own financial landscape. And the most crucial question for you is your strategy aligned for what's coming next? Thanks for tuning in.